Hello, everyone. Yeah, welcome to Decoding Markets in Three Moves. I'm Shivajit, and today we are honored to have with us Mr. Rohit Srivastava, a distinguished market strategist with deep insights into today's financial trends. Together, we will analyze the three key market developments shaping the financial landscape. So, concise, insightful, yet focused on what truly matters. So, let's get started and welcome back, sir, to another episode of Decoding Markets.
Yeah, welcome to you also, Shubhaji. Back on decoding and decoding
Yes.
with me, decoding my thoughts.
So, it's the end of the week. We are at the end, and a new week's gonna start from Monday. So, what are your thoughts? How was the week
So,
so far?
so yeah, today is a very nice day to discuss this. I got a Teacher's Day gift today. The Teacher's Day gift is that the RMI turned bullish on Nifty, and for the last 3 days we closed above the averages, and we've completed something that we call as weekly cycles. Now, a lot of this is what we teach in our mentorship program. We are having our first, uh, well, not first, I should say, I mean, the offsite of the year. And it's our fifth, I think, annual event, uh, uh, but a third time in Goa. 5 days and 6 nights of brainstorming. But more than brainstorming, it's like, I call it knowledge transfer. So there's so much to share, discuss every time based on what new things have happened, based on what people have experienced. So that's what I'm looking forward to. And this, what I just spoke about, the setup is what we actually teach people to think about on multiple time frames, daily, weekly, and then come up with an idea of what the market is doing. And today it actually has given a very nice setup where you start taking a bullish stance. Okay, so I can already see there's a question about bullish to stop loss kya. But it's not about, if you haven't figured out how to put a stop loss, then you need to go and educate yourself on that, because I may give you a stop loss today and you can tell me I'm right or wrong. But that's not what this is about, right? Because I'll take another trade after that and you won't know what that is. So unless you know how to do it, so that is why people need to go through a learning program which is more wholesome rather than a 1 day session or a course. And that's what we
Right.
inspire people to do, which is why we don't do just 1 day sessions, but we do a lot of free stuff which is on YouTube. So if they are following the YouTube channel of Strike Money, then you would have access to every webinar that we have done over the last year or two on so many topics that it is enough for you to learn. I don't know how much, but you have to put your time to it. Like on every tool there are detailed sessions, questions and answers, repeated sessions on the same topic. Beyond that, if people don't pick it up and don't get what we are trying to say, then it's really a lack of effort. And so then there's the second crowd. I call them the spoon feeders. So they just want to know what to buy and sell. We've really not been in that game, but we do try to give an opinion. So it's different between sharing an opinion and actually giving out a trade. But we'll surely consider the second as well once it is legally possible. Right now, it's not legally possible for us to give out a trade, and we avoid index even though it is excluded from the regulations. I mean, you either go all in or you don't. So it's like that with us. But back to the main point, for a long story, is that we got a very good setup, something that we discuss actively today. So it was worth taking some risk today on the long side and going home over a long weekend. It's not so long. It's a regular weekend.
But a good week. It's going to
And
be a
I'm
good
actually
weekend
started,
because of
so
the
I
setup.
actually market ended and I started writing a copy of my long short report, hoping to write a shorter one to the point and publishing it by midnight. That was my goal for the day before we do weekend with India charts tomorrow. So So
Okay.
the long short report, for those who read it and don't read it, will be out tonight. And you already know the view. So the question is whether you want to read detailed analysis and understand the context of things, then definitely that's a report for you. But if that all doesn't matter, then you know what I'm thinking.
Right, sir.
Context gives you confidence. I mean, that is why people read reports. It's nothing more than that. If you don't have context, you don't become confident about the opinion. You see, it's okay to have somebody's view, but how do you become confident? So you have to have context. You have to have a methodology. Then when you get context, then your confidence goes up. So that is the reason to have context.
Right. So this lands me to my first question for today's episode. There's been a huge hue around the market about the GST and the rate cuts. So how have GST cuts impacted our markets? And like after seeing all these, what is the positive momentum that you expect as a result of this?
So very interesting is that they've actually had a very negative impact on the market, because first the
Okay.
GST thing came out, it gapped up for a few days and then gave up all the gains and went negative from the date of the GST announcement. And then the actual announcement came. So first one was, we are going to do this, and they told you what they're going to do. So the market went up and then gave up everything. Second time they announced is they actually did it. The market opened gap up and then sold off for the intraday. Okay. So when you say the word market, so I presume the word market means Nifty. So
Right.
from a Nifty point of view, GST reforms were useless. But if you bought auto stocks, if you bought consumption stocks, if you bought many other companies that are going to benefit from this, the people who were in the know already front ran that trade. So if you see the 1 month performance of the auto sector, specifically two wheelers, it's out of the world. So if you caught the GST trade in terms of the right sectors, you probably made money. If you thought that the GST trade was the Nifty, then you probably lost money. Having said that, there is a longer term rub-off of good policy reform that you may not see immediately, but you will see in the months ahead. And from a forward-looking basis, every reform is good, and this is one more of them. I mean, say for example, we did tax cuts in the budget, right? But the market still fell in the month of February. Now that doesn't mean that you didn't increase the amount of money in the hands of the salaried class by cutting, the top end of the tax rate, which means that up to 10 lakhs nobody gets taxed. And similarly on the GST side, when you're reducing GST, especially on a lot of consumption items of which are common day to day things, which and not everything across the board. So for businesses it might not be so different, some difference but not so much. But for consumers it can be a lot different. What that does is it can not necessarily can have a positive demand impact, or and can result in paving the way for more capacity to get utilized in the industry. I heard an interesting interview saying that can eventually result in capacity expansion. I don't know how true that is, but at least we can, there is a lot of capacity which is unutilized, which is why your capex cycle is not kicking off. I don't know if this is the one that will get us to cross that line, but the second factor that it really adds up with, specifically since autos have been most benefited from this in terms of a large visible sector, it's interest rates, because they are the autos are also interest rate sensitive sectors. You lower rates, you are able to borrow and buy more of those things like cars and houses, and all are basically interest rate sensitive. I'm hoping that there'll be more rate cuts, but let's see. So far we aren't seeing a light of that. But if US starts cutting rates, will the Indian RBI also follow that line, at least give us one or two rate cuts down the line? That will be a further trigger to this entire thing, which is more liquidity, more money in the hands of people, uh, having a positive impact on markets in the coming months. So why are we feeling down and dusted? It's basically the tariffs, right? Sector. So there's this whole divergence happening. IT is collapsing. Oil and gas stocks are falling apart. and auto stocks are making new 52-week highs. Mid caps, which are growing and showing numbers over the last 2 quarters, new all-time highs. So there's a clear divide in the market that is happening. Okay, so if you pick the right stocks, super duper. If you pick the wrong sectors, you're underwater and finished. So you could be miserable or you could be completely raving. Okay, I'm going to discuss how I picked a couple of stocks that has my portfolio going up every day for the last 3 months. Okay. Now, how did we do it? We've discussed it in the mentorship program. We'll do a deeper dive in Goa. How do we do it when you combine certain technical tools and fundamentals to find the best winners and continue to write them? That is a very simple, if to put it in very short. But you have to now do the same thing using data analytics, which is part of Strike. So you scan it. There we have scanners. We'll have various other scanners going live sooner, which will also help us do the similar things. So making it simpler and simpler. You just have to imbibe the process. Once you get into the process, you can go and find, just on data, you can find everything. So I don't need to even visit. I don't need to visit a company. I don't. So that is why we will never be the classical fundamental research people who have to go visit a company, find inside information, be connected with 4 people. If that's what I need to make money in investing, then those are the companies I'll not get into. Companies that don't share information with shareholders, uh, they can, forget them. There are 3,000. I mean, India has the largest number of stocks listed. Okay. If you can't do research just looking at data in such a large basket and find some winners, then I think you have given up. You only believe in inside information and being connected to somebody is the only way to make money, which is completely wrong. I'm in this game and haven't proven these things so many times, 18 years in the industry. Okay, proving it to them also year after year after year. Every time they would be skeptical, and then we'll have a bad year, and then I'll prove it again that we can have a very good year and a very good 2 years and a 3 years. And having done that over and over again, you're still challenged by everybody that this will not work. And so once again, you prove it that it works.
That is what the second type of people are actually depending upon the informations and tips around the things going on.
Has spoiled the industry,
They
because it's
right,
completely ruined everything. And that is how, for those who don't know, who believe in the conspiracy theory, let me tell you, how do operators, and there are, so let's not be untruthful that there aren't. Every time SEBI finds cases, right? We've had Ketan Parekh and Harshad Mehta in our world. And there are many more. They figure out the system and they try to game the system. And their whole game is that eventually they need to suck in retail investors who depend on tips, right? So that's the whole point. I mean, if you believe in that science that tips is the only way you'll make money, then you are the suckers. You are the ones who are going to get fed to the operators in the end. And I've seen this at the highest level. I'm not only talking about retail investors with 50,000 rupees to invest. Okay, in the year 2000, I'm working with a proprietary house who all of his customers are HNIs, they're friends and family. Okay, and by HNIs I mean one person running a real estate business, so they have crores to invest in the year 2000, and they are still looking for Ketan Parekh tips. Now this is what I'm telling you. It happens at every level, not at the smallest level. And why? Because last time he gave me a good tip. I mean, come on. That's not the industry you want to feed. It's easy to do research and know which companies are good, bad, ugly, and where the growth is, or just do some good chart reading and stay with a good trend. Then get into that game where you're going to be the sucker in the end. That's why you exist. You exist because they want to suck you up.
right.
Why do you want to go and get sucked up? This is my question to all these people who chase this kind of information dealing. So anyway, that's just my 2 cents on it. So I have built my entire science and process of uh, finding ideas based on data analysis, and that is what Strike is all about. And I hardly push it. I will really strongly push people to choose that route and become financially independent.
So actually, this brings me to the second question for today's episode. It is To what extent do you use algorithmic or quantitative techniques such as backtesting, statistical models, or automated screening to validate and refine your market approach?
Yes, so I don't do it that much. I've run an automated model for more than a decade at Sharekhan. And the whole thing with backtesting and models is that models also change. It's something that I was told by an ex Morgan Stanley fund manager also in one of my interviews in 2011-12. I was not sure how to take it. So he was giving it as negative feedback that, you're running this thing, but, it always hits a wall. And 2-3 years down the line, I did hit a wall also. So basically what ends up happening is that you do a model. The model seems to work on a backtest on historical data. It may continue to work for the next several years on something, and then it may stop working because something changes in the market conditions that keeps it from working. And so you have to always keep on improvising your models, and also you have to keep on finding newer and newer models to really deal with. Just give me a second.
Sure.
Sorry. So that's where it's a lot of work. It's not just straightforward. You have to be prepared to keep coming up with new ideas to backtest and change models and adjust and so on. So even sometimes the models, theoretically, they are supposed to be fully automated, but a lot of human intervention actually jumps in and comes into play at some point of time. So it's a completely different game that you play if you think that you have the time to keep testing, improvising, and you want the computers to do your job. Okay, you don't want to get humanly involved in the emotions of buying and selling, because yeah, there is an emotional challenge that comes in when you're doing it yourself. And you have to overcome that before you are successful in trading. So that is also a fact. And the way that people overcome that emotional challenge is they go to systems, right? They try to automate, backtest, algos, all of that comes into picture. But that's a choice. It's not something I actively do, but if somebody chooses to do so, they can.
Got it, sir. So, um, actually, this brings me to the last question for today's session is on the silver article that you published on India Charts. Based on the Elliott wave analysis discussed on 3rd of September on the article of silver, what is the significance of the breakout above the 38.23 level for the ongoing trend?
Okay. So, what I'll do is I'll share a chart of silver. We are at a very interesting juncture on this gold silver thing. Uh, and at least from the current cycle perspective, we may be in late stages of this move, but longer term, these things might remain bullish. We will see. We are going to have to go some back and forth. But when we are looking at gold and silver, you see a lot of noise on my chart. So somewhere we started off in what we are calling a, okay, from here. What we are trying to figure out is, are we coming to the end of something? Okay, so we're trying to figure that out by really narrowing it down, at least for the move that started, say from here, somewhere in 2022. Can we actually mark this entire move as 1, 2, 3, 4, and 5? That's what we are trying to figure out. And so then we keep fine tuning it. Then we go further down and we say, okay, can we do 1, 2? I was trying to do 3, 4, 5 here, and then it extended. So we are in the fifth going on. And the question is, okay, where does 5 go? Where does it end? And that's something, of course, we have to track on a day-to-day basis. Where will it reverse? But the point is that we are in late stages of this move in a fifth, which will complete something at some degree. And then you get usually if you complete a fifth wave of some degree, you will get a long consolidation phase. Now, the long consolidation phase means several weeks of up and down moves, very similar to what you saw, say, back here. Like this is several weeks or months of up and down move. Can another phase like this happen at the end of this move? Yes, somewhere at some point. We are not there yet. But when we are, then you will see another such phase. And that is what I was really trying to explain as to where we are. The wave count is, of course, on my screen. So we are simply saying 4 and 5 of this 5 wave advance from April lows is going on. That's what it was.
Got it, sir. So that's all. That was all for today's question from my end. So let's move to the question asked by our viewers, starting from Divyaraj. This is the first question.
Guys, whoever is listening on X, I mean, every time I'm seeing a lot of YouTube questions, but if you're listening on X, you can also post questions. Just check out how, I don't know if people are able to figure it out. I haven't tried to get into a live session to give a, methodology of how to ask, but yeah, if you
So
post anything.
there is a comment. So there is a comment section. They can just post the comment over there, and the comment would be popped out over here in the live chat.
Right.
Yeah.
So,
So
Divya Raj, can you please
yes.
guide proper if you want? So this is I already addressed this right at the beginning. He was saying where to put a stop loss. I think I mentioned it. I don't want to get into the stop loss giving business right now. Okay. And if we do ever give trades with a stop loss, you'll probably find them on our site at the time when we are allowed to. But my view is bullish from here based on the setup that we got today till proven otherwise. And my views are posted every day. So, Diviraj, why don't you just track me every day? You'll know. If you just watch the morning video that we are posting every day at 8 o'clock on X and on YouTube, right? On YouTube Shorts. Uh, in the last 2 days, I've changed my view already, if you actually noticed. We were talking about downside and then we started to talk about the potential near-term upside. So that is one way of staying with it till it changes. But if you want to know more than that, then you need to get down to India charts and read.
Moving to the next question. It's from Peebles.
So this is where see all these questions become they are true on one day and they are not true the next day. So if you ask me 3 days ago, I would have still thought, okay, we can fall to 23,800, 23,500, 300, 200. The market stopped falling. I changed my view. I'm sorry, I'm not with you. You don't like me anymore. That's fine. This is how trolling happens, right? You were bearish last week. Yeah, I changed my view. I'm sorry. My system changed. My RMI gave a buy signal today. I don't care. I'm not short anymore.
Right.
Now, if you are
You
short
believe
and
in
you hate
rules.
people, so this entire business of giving views, giving research actually works on something. I'll tell everybody. Actually works on a behavioral finance issue, and it's called confirmation bias. Confirmation bias is wanting to confirm with somebody else my own opinion. So if I think I'm going to 21,000, let me ask the next guy who looks smart whether he thinks it's going to 21,000. Now, if he says yes, then he's very smart. And if he's no, I don't want to follow him. But I want to follow the three guys. This is what actually happens. Don't make a face. This is the truth. I'm telling you. I'm telling you, this is
This
the
is
truth.
baseless. This baseless.
No, but this is how it works. People subscribe to a service based on whether it matches their view. And if it doesn't match their view, they unsubscribe. This is the truth. They can't handle a change in opinion. And they can't handle a counter opinion. Okay. They
Okay.
can't also handle changes in view. So if you change this way, that way, if I say I'm long term bullish, but medium term I'm bearish, people can't understand. You'll find 5 people complaining. This doesn't make any sense. You're giving bullish and bearish views at the same time. I have faced this for 20 years. Believe me. It's not only at India charts. 18 years at Sherkan. Faced the same music over and over again. It's just how it is. So this question is just like that. But my answer to him is the same. Like a week ago, I thought so. Now I don't. I change my view. I don't care. You know.
That is what I told.
I
You
might change
follow a
tomorrow. I
set
mean,
of
if my
rules.
bullish view stops out, I will turn bearish again. So the point is, do you have a process, system, execution that will take you there? It's not
Right.
about I gave a view. Now I have to be right about that view. No. The point is, you have a view. Do you know how to trade it? Do you know how to execute on that? And if it changes, do you know how to change it? Are you willing?
Right. Moving to the last question for today's session from the viewers.
If trade deal announced after 6 months, it is 6 month Nifty trade in range only in daily chart or break before. How do you? I think he missed the news. He missed that we are cutting
Mm.
interest rates. He missed that we are doing GST reform. He missed that government might take more tax measures in the coming months. Maybe even push RBI to cut rates another 50 basis points, just so that the economy does well. So now, what does tariff got to do with it?
Right.
So tariff does have to do with a few sectors maybe which are reeling under pressure due to tariffs. Textile, whatever export related sectors, but that's like, as they mentioned, it's 2% of GDP. So avoid that segment of the market. Okay. And the easiest way to know which that segment is just to check the 1 month performance or 2 month performance of stocks. The ones that are down the most, forget it. The ones that are up the most, figure it out. It's very simple. And the heat maps look back allows us to do that in India charts. Just go and click on, if not 1 month, just click on a date to date. Market fell from this day to this day. What went up the most? Your answer is right there.
Right.
We can do that right now. There's your heat map. Okay. Classic heat maps on most websites are just about today. Okay. But you can do 1 month, you can do year to date. And the best part is you can customize. So when we customize, so even if I see 1 month, autos on top, India consumption index, MNC, metal, and so on. Okay. I can even use it from a point to point. So if I see, okay, market has been falling either from year to year, 21st of August to 29th August, or I want to take a slightly longer time period. Market peaked on 30th of June. From 30th of June to 29th of August, what did well and what did not. Okay. So that's what, 30th of June to 29th of August. Yeah. So now let's just go and do that. So let's do a custom test on that. 30th of June, 29th of August. Boom. What are the top performing sectors? Auto, FMCG, consumption. Now, that doesn't mean that the market bottoms out and the worst performing sector cannot do better. And that's a question I get sometimes. So, small caps are down a lot. Surely they can rebound the most as well. Okay. But there is always somewhere which is performing better than the rest, which will continue to do well. Now, if you've missed it, of course, that doesn't mean you buy it now. You have to buy it on the next dip. You have to wait for a correction if it's already moved up. But that's sort of how we look at it. Now, see, for example, if you even measured it to the bottom and you saw autos are doing well, what would you have bought 4 days ago?
Right.
So there's a way to everything, and there are many ways. So it's not like there's one way to do something. Yeah. Next.
So that's it for today. It was only for 3 questions. I am not taking all the questions for today. So that's a wrap up for today. Thank you, viewers, for joining in, and have a very safe trading journey ahead. I will suggest you guys, if you guys want more information, you want to learn about the markets, please go on to www.indiacharts.com and just roll on for our mentorship program. You guys will learn from the beginning to the advanced level, everything. If you guys have the knowledge, you want to enter the market, you want to set up your decisions on the basis of data points, we have strike.money. Just go and have a look on that. You will find everything in one place, and that too very strategically and graphically represented for your convenience. And if you guys want tips, I'm sorry, you guys, all the best.
We can't give tips anyway. But
Right.
if you want to know my opinion on things, on markets, on various factors, then download the India Charts app and start reading. That's it, on an everyday basis.
Right.
So that's how you stay in touch.
Thanks a lot, everyone. Thank you, sir.
Welcome.